Okay, welcome back. I'm actually going to do a book review today, something I haven't done for a while. The book I'm going to review is Antifragile by Nassim Taleb. He's one of my favorite authors on trading books. Fooled by Randomness remains my favorite trading book. But I think this one is a really essential one for traders to read and learn from. If you found over the last couple of months when there's been lots of volatility that you've been struggling as a trader, it's generally when markets are in sort of a bit more turmoil or volatility, you struggle or you lose money. If you lose money when equities go down, for example, then you should learn about some of the concepts in here. They're things that I've learned over my decades in the industry. And I think to survive as a trader, you need to use the ideas that Taleb is presenting here. So I'm just going to give a quick recap on particularly some of the things I think are very important. The first stage is to understand what being anti-fragile means. Obviously it's the opposite of being fragile, but some people get kind of misconstrued here about what the opposite of fragile is. They tend to think that the opposite of being fragile is being robust. So if I have a teacup and I throw it on the floor, it's fragile, it will break. If I have a stronger teacup, I throw it on the floor, it doesn't break. That is robust, but that is not anti-fragile. Anti-fragile is actually something that does better. It improves. It becomes stronger when it's under that sort of extreme circumstances. So a teacup, but when you throw it down, it actually becomes stronger. So in a sense of a trader, I see this so often with traders and fund managers as well, that they do well when the markets are good, and as soon as the markets get volatile or equities fall in particular, they lose money. And that's a fragility. They have the possibility that they're going to blow up their account, or that if you're a fund manager, you lose so much money that you'll have redemptions, etc. And they are fragile. The opposite of that as a trader is not just a trader that it sort of gets through that unscathed. It's a trader that profits from those scenarios. And if you think about those times like recently where stocks fall sharply, there's some great opportunities in those environments, both on the short side of equities and also to be buying cheap assets after they've fallen. So an anti-fragile trader is someone that not just sort of gets through that scenario, but actually profits from it. And in reality, those situations, there are some great opportunities for traders out there. And if you're not someone that can take advantage of them, then you're missing some really good opportunities. Now, Taleb talks about initially that the first step to becoming anti-fragile is to reduce your downside. That's absolutely true. That just helps to get you to be more robust. But then going forward, you need to be able to build so that you can profit from those situations. He makes a really good old quote he quotes in there, which is, the good times essentially take care of themselves, but you need to protect for the bad times. And that's so true as a trader, something I always try to teach people. And you need to be around, you need that concept of, I need to not just get through, but I can thrive in this environment. One thing that I found, he doesn't talk about this, but I found with a lot of retail traders and fund managers, even some hedge fund managers, is that, they have that sort of safety that if they lose, but everybody else is lost as well, then they find some sort of comfort in that. It's like, well, I lost 8% last month in the markets, but everybody lost 8%, or everybody else lost 9%, so I've done well. And I really don't subscribe to that view. As someone who's traded for myself with our fund, we are actively trying to make money in those markets. We're trying to make money in all conditions. An anti-fragile, a strong trader will try and be able to make money in all conditions. Taleb talks about the fact that in order to become anti-fragile, you have to be able to learn from losses. You must look at your losses and find out what's going wrong with them and learn from them and exploit that as an opportunity. Something I talk about a lot in the Norden method with my traders. Use all the feedback you get to improve. It's another reason why I've said this before, why I can't use technical analysis, because if I employ an indicator and it loses money, I can't learn from it. I just have to do it again and do it again and do it again. If my chart pattern, my head and shoulders pattern falls and I sell because it's a top and I lose, what analysis can I do to make me more robust? I can't. The pattern is the pattern. I have to do it again and again. That's one reason I said it many, many times. I can't use and I won't use strategies where essentially I can't learn from it, because that basically it makes me fragile as a trader. So glad to see Taleb talking about those points as well in there. He talks about using disconfirmation. Again, something I talk about a lot in my books and with my Norden method traders. you must actively seek disconfirmation. Actively look for reasons why you might be wrong. Something, we should do all the time. Whereas most traders are looking for confirmation. They look for reasons why their original trade is good, and they're missing out on the information that could save their trades, that could save them from the big losses. The final point I'll make about this, and there are lots of great points in here, but the final point I want to talk about is something that I think is really important to understand. A concept of if an idea has been around for a long time, it is more likely to survive for a long time. It's more likely itself to be anti-fragile. So ideas and books, if you think about, for example, a book like The Art of War that was written hundreds of years ago, but the concepts behind that are still relevant today. They are still very, very good concepts to learn. I think a lot of us read that book and learn from it. And from that, we can tell it's more likely that people will still be reading that book in hundreds of years' time. In trading and in life, it can be very easy for people to like the shiny new thing, the new indicator, the new object that's been around. The reality is it hasn't been tested. And ideas that have been around in trading, for example, for decades or longer, are more likely to be the ones that are still around in decades or longer. They have stood the test of time. So when I talk about the Norden method, it's based on the techniques that I learned decades ago, just modified market making techniques that have been around for decades. And people say, oh, that's old hat. I've got this shiny new indicator. As Taleb explains, if you want something that's most likely to still be working in decades time, it's actually something, a concept that's been around now. Yes, it's been around for decades or for a long time. Yes, we may have to tweak it, but the ideas are still sound. And the thing that is new is unlikely to have been tested, is unlikely to be shown whether it's fragile or anti-fragile, and you should probably in the short term stay away from it. So I think that's a really good point and something that I've sort of tried to get across as well to people for quite a long time. So Antifragile, if you haven't read it, I would really recommend you read it alongside Fooled by Randomness to get a very good insight into what you need to be a trader, what knowledge you need, what techniques you should be using, and how to think to get through those difficult times and become more of a stronger trader when everybody else is weaker.